Hi my friend, this is Kevin Poon. Welcome to my channel. In this video, I'm going to share with you my latest view on the market and also my latest strategy. I hope you will enjoy it. Before I tell you my current view of the market, let me show you some charts. The first chart is this one is the Dow Jones Industrial Average Index, and please take a look on the blue line and also the black line. The blue line is actually the 50-day moving average, and the black one is the 200-day moving average. What happened is that, of course, we have a bear market or bull market. If it is really a bear market, the index will go down, of course, and so the 50-day moving average will go down. Also, it will drop below the 200 day moving average. It's very normal, but in many cases, it doesn't mean that, or when the bull line drop below the black line, it doesn't mean that it is a bear market. In many cases during the bull market, there is also a correction, and during the correction, when the bull line drop below the black line, the market rises back very quickly. You see in 2020, of course, at that time there was COVID, and there's a at the breakout of COVID, and the market is very panic. So the market dropped very fast, but when the bull line dropped below the black line, you see the market rise up very quickly. And 2019 also, and 2015-16, you see when the bull line dropped below the black line, and it's almost reached the bottom. And we keep watching. Let's see. Yeah, here, 2013, when the bull line is near the black one, the market keep rising. And 2011 also, 2010 also. Of course, there's sometimes there was a bear market, yeah, but in many cases, in case it is a bull market, when the bull line drop below the black line, it means that the correction is nearly the end. So when we look at the current chart, the bull line, the 50-day moving average, is crossing the black line, and the market rise up quite quickly. So I can predict that it is the bull market scenario. So I have a bull market bias. So I think that it's still a bull market. Of course, for Dow Jones it's just going up and down. But if you look at the Nasdaq, you see the index has already broken the high of this year. So the market is quite well. When we spend 3 months for the correction, it only takes 2 to 3 weeks to break the high. So if you lack of confidence on the bull market, and you will be afraid that, oh, the market is not doing well, and the markets keep dropping, and there are lots of problems. Many people will tell you that there will be a recession nearby, and because of the threat, rates is keep rising, the market will not going up. But when the market rise back again, it takes very fast. So if you sell your stock at this stage, at the correction, and you believe it was a bear market, somehow at these 2 weeks you can't trace any stock because you'll be afraid, oh, it rises up so fast, and you have no chance to trace back. So for my strategy, I don't time the correction. I will because my long-term views, because it is a bull market right now. Why? It was due to the Dow Theory. The Dow Theory, what it represents that despite that there's a bull 1, bull 2, bull 3 stages, and also bear 1, bear 2, bear 3 stages, and for each stages, the Dow Theory has described the atmosphere of that period. From my experience, when in last year, when it was almost October or September, when the market was really very bad, and it was down to say let me look at the S&P, say around 3,500 something, and the atmosphere at that time was very bad. Although the index doesn't drop a lot, but there was a lot of stocks like, say, SE, Limited. It has dropped from 380 to where? 40. Almost 90%. So there are lots of bad stock, really weak stock that dropped a lot. So I believe it was a bear market, although the index doesn't drop a lot. But anyway, at that time, the atmosphere of is very bad. If you remember the in the last bull market, many people talk about ARKK, and for ARKK, the ETF from Cathie Wood, it has dropped from 100, almost 160 to 35 something. So I believe it was a bear market. It obviously it was a bear market. But from Dow Theory, just a second. From Dow Theory, in the bear market, there are 3 stages: bear 1, bear 2, bear 3. In the stage of bear 3, the atmosphere is very bad, and as many people feel that many people lost a lot of money, and then many people felt that they have low hope, and in the future the economy is very bad. Okay, so it matched the atmosphere at that time. And after the bear 3, there is a bull 1. In bull 1 stage, the atmosphere is still very bad. We have bank crisis, many different crises. The people will tell you that the recession is coming, and a lot of bad news. But the difference is even though the atmosphere was really bad, but the market is rising back again. So if you remember, at the time in the March this year, people believed that there was a bank crisis and a lot of bad news, but you see the market rise back again, and you see the Nasdaq is breaking the new high. So I believe that it is a bull market now. Yeah, I'm not sure if it's bull one or bull two, but it's a bull market now. And it's my long-term view. But of course, I cannot guarantee my view is 100% correct. So for my strategy, we always have a plan in case that it was not bull market, we are going to survive. So for my strategy, I will have some cut loss points on my stocks. If it drop below the cut loss, of course we sell. We follow we are disciplined. And but if it doesn't drop below the cut loss points, we will keep holding our stock. And because it for me is just the start of the new bull market, so I will try my best to hold my stock. Of course there are some times we like in the last 3 months of a correction, or there are few stocks drop below the stop loss points that I have, so I sell some of them. But the main one is the NVDA. I'm not happy with that, because for NVDA, I bought at 260 something, but during this period, it dropped below my $409, so I sold at that time, and it rise back. It is my fault, but I have to follow my rules. Otherwise, if I don't follow my rules, one day, even though I love this stock, one day if it is not really that good, and I didn't have the discipline to sell it when it dropped below the points, and somehow I would get hurt. So I for myself, I always follow the rules. But now, although I sold it already, I will buy back again later, where after the result, got the quarterly result tomorrow. I'm not saying that I'm going to buy after the result. I mean, I have to look at the tomorrow result and see how it goes. If it goes up and the result is really good, and I will find a chance to wait for a little correction and then buy back. Because from my point of view, if we buy right now, the stop loss is very far away. So in case we buy here at 500 something, so my stop loss is 400 and maybe 400, and it will be too far away. So it doesn't match my concept. So I will wait, but somehow at the meantime, I also kept a lot of good stocks like Microsoft. It has already break the high, so it's much better. So during the correction, although I sold NVDA, I still keep a lot of good stuff. So it doesn't matter. We cannot be 100% perfect on the strategy, but is I want to play safe. So now what I'm going to do is keep holding my stock and find a good one. Of course, we don't suddenly, if you have low stock on your portfolio, we don't suddenly put all in and buy all the stocks. I normally I will buy a little bit when the market keeps going up, and our portfolio keeps earning. I will add a little bit by little bit. Currently, I have 80% stocks in my portfolio, and so I'm almost full. So it doesn't matter to if I have no other opportunity to buy another stock when we have to be patient on that, and that's it. So besides the Dow Jones, I mean the blue line and black line, I have another taglit called Kevin's Blue Bear line. Of course, I know the name is not that sounds professional, but I will make up another name. But currently, I used Kevin's Blue Bear line. As you see, there's a line each month. When the market's below this line, it means there's a chance that the market is not quite good, so we have to be safe. But when the market is with above this line, it means that it's safe, it's stable, and we are going to hold our stock. So how is it now? In August, of course, the market dropped below the 9, so the market has correction, but now it has risen up above this 4,219 level, and so it should be fine right now. And now, if you don't have other any stock on your hand, maybe we can have a look on some good stock like NVO. We may use another chart to see the live data NVO. Yes, it's pretty well, right? Although you may be afraid, oh, it's too high, but in my concept, what I'm going to invest is we want to find some good business. For if it is a good business, the market will show you that they are they love it, and you will not you don't have chance to buy at a very cheap level. So in my idea, in my philosophy, I want to find those good stock which is strong, very strong one, so they almost in the at a high level, but it doesn't matter because when we buy the good stock, we have a very clear stop loss. For this one, I have a stop loss at, just let me check, at $92. It means only 10%. So let's see, if my view is wrong, so it only lose 10% of this stock. But if it is correct, I will keep I will capture this trend to buy this stock and keep holding it, and let's see how it goes. And that's my philosophy, and let's see. So thank you for watching. I hope you enjoy it. See you next time. Bye bye.